Good afternoon, and welcome to the Prince George's Community Federal Credit Union 2016 Lunch and Learn series. Today's presentation is brought to you in partnership with Coffee, a nationwide financial coaching and education center focusing on improving the financial health of individuals. As the premier credit union of Prince George's County, they have joined with Coffee to expand their mission of providing quality financial education to their community and lending insight into credit management, home ownership, and money management. Prince George's Community Federal Credit Union is a full-service financial institution serving anyone who lives, works, or worships in Prince George's County, Maryland. They are one of the county's best-kept secrets with competitive loan and savings rates as well as discounts to national retailers. They currently serve over 15,000 members in the area and welcome you to come and experience the benefits of membership as well. Later on in the presentation, I will display their contact information and answer any questions you may have concerning your financial needs. Please note that today's webinar is live and all phone lines have been muted. If you have questions, please feel free to type it into the question field on the right-hand side of your menu bar. All questions are private and will be addressed at the end of our discussion. We will be offering a free 60-minute financial coaching session with the completion of 3 webinars. More information will be given at the end of today's presentation. Lastly, a recording of today's session will be available within 2 days. Details will be sent to your email following the presentation. And with that being said, I'd like to introduce myself. My name is Charmaine Williams, and I work with Coffee, and I will be doing today's presentation. So with all of that, let's get started. What is a credit card? A credit card is a payment card issued to users as a system of payment. It allows the card holder to pay for goods and services based on the holder's promise to pay for them. The issuer of the card creates a revolving account and grants a line of credit to the consumer or the user, from which the user can borrow money for payment to a merchant or as a cash advance to the user. A credit card is different from a charge card. A charge card requires the balance to be paid in full each month. In contrast, credit cards allow the consumers a continuing balance of debt, subject to interest being charged. A credit card also differs from a cash card, which can be used like currency by the owner of the card. And a credit card differs from a charge card also in that a credit card typically involves a third-party entity that pays the seller and is reimbursed by the buyer, whereas a charge card simply defers payment by the buyer until a later date. So what are some of the pros and cons of using credit? Well, some of the advantages include being able to buy needed items now, reduce a need to carry cash, creates a record of purchases, it's more convenient than writing checks, and consolidates bills into one payment. Some of the disadvantages: there's interest, so it comes to a higher cost for the items. It may require additional fees. Financial difficulties may arise if one loses track of how much has been spent each month. And there's the increased chance of impulse buying. So how do lenders choose whom to give credit to? How do they decide what a person's credit limits should be? Well, they use the 3 C's: character, capital, and capacity. With character, they want to know, will you repay the debt? They're going to ask, have you used credit before? Do you pay your bills on time? Do you have a good credit report? Can you provide character references? And from your credit history, does it look like you possess the honesty and reliability to pay credit debts? And then they're going to want to know, how long have you lived at your present address? When it comes to capital, they want to know, well, what happens if you don't repay the debt? What property do you own that can secure the loan? Do you have a savings account? Or do you have any investments to use as collateral? And lastly, there's capacity. Can you repay the debt? They're going to ask how long you've been at your present job. Do you have a steady job, or are you constantly switching? What is your salary? How many other loan payments do you have? What are your current living expenses? And what are your current debts? They want to be sure that you're able to pay back what they lend you. So where do you start? You start where you are. The first step in building a better credit report is to understand what's on your report now. So the three major credit reporting bureaus are Experian, Equifax, and TransUnion. You can get reports from all of these companies for free at www.annualcreditreport.com or by calling 877-322-8228. So when talking about credit, how many of you visualize your credit score when you think about credit? Well, what is a credit score? Your credit score is a snapshot of a person's credit picture. It's a numeric value that is assigned based on the borrower's level of credit risk. So the higher the score, requests for credit will be approved and receive favorable interest rates. And then credit scores change for good or bad over time depending on your credit history. Now, as you can see on the screen, these are the components that make up your credit score. The largest chunk, the 35%, is your payment history. The second largest, the 30%, is the amounts that you owe. Then we have 15% of that is the length of credit history. How long have you had credit established? The next 10% is new credit. How many things have you opened recently? And then lastly, 10% is the types of credit in use. So we're going to get into that in the next slides. If you've ever had credit problems in the past, you probably feel frustrated and worried that your damaged credit history will stay with you forever, or at least a very long time. And you may also feel helpless and lost and trying to find paths to rebuild your credit. We'll get more into that a little bit later as well. So what are the different types of credit that's being offered? Well, there's single payment credit, and this is when items and services paid for in one payment within a stated time period, and interest is usually not charged. So these would include utility companies, medical services, and some retail businesses. Next is installment credit. This is when merchandise and services are paid for in 2 or more regularly scheduled payments of a set amount. The interest is included, and money may also be loaned for a special purpose, with the consumer agreeing to repay the debt in 2 or more regularly scheduled payments. And some examples of these are some retail businesses, such as car and appliance dealers, commercial banks, consumer finance companies, savings and loans, and credit unions, like Prince George's Community Federal Credit Union. The next is revolving credit. Many goods and services can be bought using revolving credit as long as the total amount does not go over the consumer credit limit. Repayment is made at regular time intervals for any amount at or above the minimum required amount. Interest is charged on the remaining balance, and examples of these would be retail stores, gas stations, and financial institutions that issue credit cards. So now that you know the different types of credit that can be issued, you're going to want to know what your credit responsibilities are. So first things first, avoid buying on impulse. If you guys remember from the slides previous, that was one of the disadvantages of having credit. So you're going to want to avoid buying on impulse. You're going to want to borrow only what you can repay. And remember to read and understand your credit contracts. Pay your debts promptly. We cannot emphasize this enough. You always want to pay your bills on time. And on time is on or before the due date. So pay them promptly. You're going to want to notify your creditors if you cannot meet the payments. So if something happens, don't feel ashamed. Don't be frightened to call them. Call them and let them know. Explain the situation and they'll be willing to work with you. Report lost or stolen credit cards immediately. And then never give your card number out over the phone unless you initiated the call or are absolutely certain of the caller's identity. Now we're going to discuss some ways that you can rebuild your credit history. So you're going to want to establish a steady work record. Again, that's in one of those 3 C's. How long have you been working at your current job? Or do you switch consistently all the time? They want to see steady history. Pay all bills promptly, on or before the due date. Open a checking account and don't bounce any checks. You're going to want to open a savings account and make regular deposits. Apply for a local store credit card and make regular monthly payments. Apply for a small loan using your savings account as collateral. Get a cosigner on a loan and pay back the loan as agreed. Now, Prince George's Community Federal Credit Union offers a product called the Credit Enhancer Loan. And that is a great way to establish or improve your credit score. You can borrow as little as $500 or as much as $3,500 with a maximum payback term of 36 months. As the date of this broadcast, rates are as low as 4% APR, and your loan amount will be secured in your share savings account for the duration of the loan. So if you have any further questions or concerns, or you would like to talk about this Credit Enhancer loan, feel free to contact them to learn more and to open an account. And at the end, I will be displaying their contact information. So how much credit can you afford? You never want to borrow more than 15% of your yearly net income. So for example, if you earn $2,000 a month after taxes, then your yearly net income is 12 times the 2,000, which equals 24,000. So to calculate 15% of your annual net income to find your safe debt load. So that's 24,000 times 15% gives you 3,600. So you should never have more than 3,600 of debt outstanding. Now please note that housing, like rent and mortgage, should not be counted as part of the 15%. And your monthly payments shouldn't exceed 10% of your net monthly income. So again, for example, if your take-home pay is $2,000 a month, 2,000 times 10% is $200. So your monthly debt payments should not total more than $200 a month. So what is the cost of credit? You need to know the penalties for any missed payments. Are there fees, etc.? So that was one of your credit responsibilities, to read and understand your credit card contracts, or any credit contract for that matter. You want to know the penalties for any missed payments. You want to know what your APR is, your annual percentage rates, and those can vary greatly. One card issuer could offer you a 5.99% rate, while another could offer you a rate as high as 21%. And the difference in what items will end up costing can be astounding. It is also important to recognize the difference between fixed and variable rate credit cards. With a fixed rate card, it will never change. You will know what your payment is each month. However, with a variable rate credit card, your monthly payments can change depending on the increase of prime rates. Now, Prince George's Community Federal Credit Union provides great fixed rate credit cards with low APRs. So there's no worry about your rate fluctuating with the change in the economy, and you will be certain of your monthly payment. The next thing you want to look out for is annual fees. There are a lot of credit card companies out there that, yes, charge you annual fees. And some cards have none, and others can be all the way up to about $75, and in some cases higher. Then the next thing you're going to want to know is transaction fees. If you have a balance transfer, what will it cost you? And then grace periods. How many days after the due date do you have to pay your debt before you are assessed a late fee? Now keep in mind that most cards no longer have grace periods. So that's something you're going to want to check out when you get your credit card contract. So what are some of your credit card features? You're going to want to look. What is your credit limit? Is it starting low? Do they give you something high? Will you be able to handle that? How widely is the card accepted? There are still some places that don't take Discover cards. So you're going to want to know, where can you use your card? Think about the advantages of a major credit card versus a store card. Remember that that store card can only be used in that store, whereas a major credit card is more widely accepted. And then what services are available? Are there cashback incentives? What are available to you? Does your credit card offer free credit score check? So these are the things that you're going to want to look into. Before you sign up for a card, you're going to want to shop around for the best terms. Okay, bankrate.com is a great resource for finding the best available deals. Again, read and understand your contract. Many cards nowadays have 0% APR interest when you sign up, maybe for the first 6 to 12 months. But then you have to know what it's going to be after that time period. So read your contract. Do not rush into signing anything. And once a contract is signed, keep a copy of it. Know what your penalties are if you miss a payment. Figure out the total price when paying with credit. A lot of credit card companies now do offer this. It's on your statement, how much your bill is, the balance. And if you only pay the minimum payment every month, it'll tell you how long it will take you to pay off that debt. And then again, make the largest possible monthly payments. So if you can pay it off in full at the end of the month, that's great. If not, try and pay more than the minimum that is due. So now we have that Prince George's Community Federal Credit Union offers great deals on credit cards. There's no annual fee, so you save money. They have fixed low rates that offer stability in payments. There's no fee and low rate balance transfers. There are rewards options, and their worldwide acceptance. Okay, so when they did a study of what members are looking for in a credit card, that is what they found interests them most. And again, if you have more questions regarding their credit cards, fees, etc., their contact information will be up at the end of this webinar. Now we're going to get into your credit rights. If you were to look on the right-hand side of your screen at your menu bar, there's a section that says handouts. And in the handouts, it's going to say credit cards, what you need to know, white paper. Those are the notes for today's webinar. And it's going to go into complete detail on each one of these acts, because to get into each one individually alone would take more than an hour. So we're going to start with the first one, the Truth in Lending Act, which was created in 1968. And this ensures that consumers are fully informed about cost and conditions of borrowings. This landmark piece of legislation guarantees that creditors have to state the cost of borrowing in a common language so that you, the consumer, can figure out exactly what the charges will be. You'll be able to compare the costs and shop around for the credit deal that is best for you. Okay? Then there's the Fair Credit Reporting Act, which was enacted in 1970. And this protects the privacy and accuracy of the information in a credit check. So under the Federal Fair Credit Reporting Act, credit reporting agencies, TransUnion, Equifax, and Experian, are not allowed to report any information that is too old, incomplete, or wrong. While positive or neutral information can be reported indefinitely, negative information can only be reported for the following length of time. So bankruptcies be 10 years from the date filed. Civil suits, judgments, and records of arrest no longer than 7 years from the date of entry, or the current governing statute of limitations, whichever is longer. Paid tax liens are 7 years from the date that they were satisfied or paid. Unpaid tax liens obviously will be indefinite until it is paid. Any collection or charge-off account is 7 years unless a U.S. government insured or guaranteed student loan. And then any other adverse information would be 7 years from the date of last activity. And then when it comes to inquiries, those would stay on your report for 2 years. The next act is the Equal Opportunity Act, and this was enacted in 1974. This prohibits discrimination in giving credit on the basis of sex, race, color, religion, national origin, marital status, age, or receipt of public assistance. This law applies to any business that grants credit to consumers, including banks, finance companies, retail and department stores, credit card companies, and credit unions. The next one is the Fair Credit Billing Act, and this was enacted in 1974. This sets up a procedure for the quick correction of mistakes that appear on a consumer's credit account. When you purchase goods or services with a bank card or a retail store charge card and you discover an error in your account billing statement, you have the right to have the problem resolved through the dispute resolution process established by the Federal Fair Credit Billing Act, the FCBA. Okay, so that applies to errors such as your account is not properly credited for a payment that you made or a refund that you're entitled to, you're billed for goods or services that you did not accept or that were never delivered as agreed, your account statement reflects charges for insurance or for another type of service or product sold by a credit card company, but you did not authorize the charges. There's a lot more, but again, these would be in the notes that you could download on the side, on the right-hand side of your page. The next one is the Fair Debt Collection Practices Act, and this was enacted in 1977. And this prevents abuse by professional debt collectors and applies to anyone employed to collect debts owed to others. It does not apply to banks or other businesses collecting their own accounts. So here's a summary of what the debt collectors covered by the FDCPA cannot do when they are trying to collect from you. They cannot call you at an inconvenient time or place, such as before 8 a.m. or after 9 p.m. unless you give them permission to do so. They cannot call you at work if they know that your employer does not want you to be called there. Also, they cannot contact your employer about your debt. They cannot contact you by postcard or use an envelope that makes it clear that a debt collector sent it. They can't call you repeatedly within a short period of time, like every hour during an afternoon or day after day, for example. They cannot contact your neighbors, relatives, friends, or other people to get information that can help them collect the money that you owe. They can't order that you accept their collect calls or pay for their telegrams. And they cannot take your property or threaten to take it unless they are legally entitled to do so. So again, unless you signed a paper that said, yes, you can take my car if I don't pay my debt, then they cannot take your property. Okay? So there's a lot more. Those are in the notes as well. And then the last one would be credit card accountability, Responsibility and Disclosure Act, and that was enacted in 2009 and is also known as the Credit Card Act. So this act makes it more difficult to acquire credit from banks and other lenders. It may make it more difficult. They have lost some of the leverage they used in the past to raise interest rates or because of a default on another bill. The banks and lenders won't be able to accumulate as much profit as they did before because the industry will have to be more transparent. So they will probably be spending some of their time and brain power on discovering different methods or reintroducing older methods to make up for lost profits. Now that the act has been passed, the credit card industry is going to change. And as always, you want to be frugal with charging what's on your card. The less that you have, the better off you will be. Okay, so what does card mean to you? It will make it easier for you to deal with the credit card giants. For instance, credit card issuers will now be required to show you on periodic statements, again, I discussed this a little bit earlier, I mentioned it, how long it will take you to pay off your existing balance and the interest that you will accrue if you only pay the minimum amount every month. So this way, it gives you that opportunity to see how long it's going to take you to pay off that debt. That $600 TV at 25% interest, if you only make the minimum payments, you may be paying almost double by the time you finish, getting that payment down, by getting that bill down. And that's if you don't charge anything else. So they're making it responsible that you could see how long it is going to take you to pay off those debts, right? That is a really, really long act. There is a lot to this credit card act. And again, it is in the notes. That in itself would be a webinar. So with all of that being said, I want to open up the floor to questions. If you have any questions, please let me know. Feel free to ask. Now is the time. Do we have any questions? Any concerns? Okay, I see a question here. All right, when you go to annualcreditreport.com. All right, so the question is, when you go to annualcreditreport.com, can you get reports from all 3 agencies with a single request, or do you have to request each one separately? You can get your report from all 3 agencies with a single request. We like to recommend that if you're going to pull your reports, you stagger them throughout the year because you're entitled to your free credit report once a year because it's yours. So if you can, stagger it. Every 4 months, pull a different one because you're entitled to a free report from each of them for that year. So you can get it all at once, or, like I said, break it up into a couple of months. Every couple of months, you pull another one, and then that way you could see, if anything has changed, if something has popped up that wasn't there before. So you're going to want to look into it that way as well. Okay, it says, what is the APR after the 6-month transition? I'm confused as to what 6-month transition. Oh, this is for a direct question to Prince George's Community Federal Credit Union. Charmaine, I've made you a panelist. Would you be able to answer that question? It says, what is the APR after the 6-month transition? And secondly, are your card rewards available for airlines and hotels? I can't hear Charmaine. There we go. Charmaine, are you on? Can you hear me?
Yeah. Yes, I'm here. Good afternoon,
there we go.
everyone. Good afternoon. Yes, after the 6-month balance transfer period, actually the rate that is quoted, the 299, is for our balance transfers. Thereafter, your rate will be based on your credit worthiness. So based on what your score is and so forth and other qualifying information, then determines whatever your rate will be thereafter on your balance transfers. As far as your purchases are initiated when you, the rate for it is initiated when you apply. Now your second question, it had to deal with do we also, I believe, offer rewards on airline tickets and so forth. When you apply for our rewards card, you can gain points for practically anything, for travel, for bonus points on basically anything that you use the card for purchases and so forth. I hope that answered your question. If you have any more questions, you feel free to contact us directly and someone will be happy to share with you all the details of our product.
Okay. I see on here as well, it says, what if I was declined due to lack of credit history? How do I get a card to start history? We usually like to encourage you to apply for a secured card. Charmaine, do you guys offer secured cards as well, a secured credit
We
card?
We definitely do. We encourage that as well too, to start your credit history, to get started with secured card, $500, and then you can kind of build your history from there and start getting on the right track to then gravitate to another card if you would like within a couple of months.
Okay. Are there any more questions for Charmaine or myself, Charmaine, that
Charmaine
you
or
would
Charmaine?
like to ask, that you would like to ask today? Um, I'm not sure if this is a question. It says best way to get interest rate lowered. Is the best way to get your interest rate lowered with your credit card company or like any type of loan? I'm not sure. Hold on. Okay. I think the best way to get your interest rate lowered, um, I think that's the way the question is. Oh, with your current credit card. Okay. The best way to get your interest rate lowered, in my opinion and from my personal experience, is to actually ask the company. Again, obviously they're gonna pull your report. They're gonna most likely do a soft pull to see where you're at, how your credit history is looking. You have that big chunk, remember, that 35% is your payment history, and then that 30% is how much you owe. If you've been a good client or a good client, and you've been paying your bill every month on time and you're keeping your utilization low, the best thing to do would be to ask them. More likely than not, they'll be willing to work with you once they've seen your history with them, and you could possibly get your interest rate lowered. And if that's not possible, then maybe a balance transfer to another card would work for you. Does that sound about right, Charmaine?
Yes, that's a good suggestion.
Okay. And then it says, are the reward cards issued by the credit union or another financial institution?
All of our cards are issued and serviced by our organization. It's not a third party. We partnered with Visa to create these cards, and I think just earlier, as Charmaine mentioned, we did a survey of our membership pretty much asking what are the major features and benefits that they needed and were looking forward to having in a card. And so when we built this, we pretty much built it from those suggestions. So everything is homegrown, quote unquote, and we service everything and take care of our members directly.
Okay, thank you. Are there any other questions for us today? I just want to make sure that we've answered everyone's questions. If you have any other concerns, please feel free to ask. If not, again, I'm going to display their contact information next, and you could contact them directly if maybe you're feeling a little shy and don't want to ask now. That's fine. But if we don't have anything else, I guess we're going to start to wrap it up. Okay, it looks like there's nothing else. Oh, nope. Okay, nope, there's nothing else. So I would just like to thank all of you for attending today's educational webinar. And to learn more about Prince George's Community Federal Credit Union or to speak to a member service representative, please visit www.princegeorges, with an S at the end, cfcu.org, or call 301-627-2666. Okay? And to schedule your free 60-minute financial coaching session, you're going to please call Coffee at 866-459-5165. Thank you again for attending. You guys have been a wonderful audience. And please download the notes and remember that you're going to receive an email with the video and the recording of today's session. So thank you all again and have a wonderful day.